McDonald's missing fourth quarter earnings and revenue expectations. U.S. same-store sales declining 1.4% from a year ago. Fast food giants' results weighed down by an E. coli outbreak last fall that left one person dead and hundreds sick. Joining us now, we want to bring in Nick Setyan. He's Wedbush Securities Managing Director of Equity Research for Restaurants. And Nick, it's great to have you here on Yahoo Finance. So I laid out that intro, yet we're looking at shares up just about 4.5%. Talk to us about why that is. Obviously, they're seeing some strength when you look overseas into their international markets.
Well, first, thanks for having me. The international was a little bit better than expectations. I mean, I think the reason why the stock is up the way it is due to the guidance around 2025. They guided for operating margins actually being slightly ahead of this year, based on a second half recovery or a theoretical second half recovery. So they're very optimistic that sales trends will improve in Q2 and then into the second half, with the trough being Q1. So that's why the stock is up.
At what margin level do you think the sales trends will improve? Because it seems like everybody has been shifting their strategy to really leaning in towards the value side of the menu.
Right. So, what they're saying is, like, operating margins were 46.3% this year. We think operating margins will be slightly higher in 2025. The expectation was that the guidance would imply closer to 45%, lower than 46%, going into this call, given the early trends we've seen in Q1. A lot of people were expecting expectations, not, guidance that implies a little bit of upside versus 2024.
Nick, what have your checks shown you, or what have you noticed this current quarter? Are we seeing that rebound?
So we're not seeing it so far in Q1. Part of it is weather, and then part of it is McValue has really not necessarily driven incremental sales, right? It's driven incremental guest counts, but the average check is down. So we haven't really seen much of a change from the trend line, in December. Now, what they're saying is, they're very optimistic that as they layer on menu innovation at the higher end of the barbell, once they regain those guest counts, that's going to resume driving that average check. And again, that happens, into Q2 and the second half of this year.
And so as that all plays out, for investors that are trying to figure out if this is now a valuation that they should jump in to McDonald's on, banking on this rebound plan, is there belief from what you're seeing? Is there conviction in this trade right now?
I think it's too early to tell. I mean, I think, once we kind of see where everything settles in terms of consensus expectations post the quarter today, then we can really answer that question. From just my perspective, I think they're going to be able to get the guest counts up, and continue to take market share. Given their scale, they're really just in the prime spot to do that. And if you just look at sort of the pre-coli, plus 5% type of comp in the first 3 weeks of October, driven by that chicken Big Mac, that kind of just goes to show you what the underlying trend line can be when they're on fire. That was a big disruption, obviously, because of E. coli. I think as we kind of get further and further away from there, I think a lot of these strategies will come together, and we'll see, comps re-accelerate in the second half, which is why I continue to have my outperform rating.
Nick, appreciate the analysis. Thanks so much for joining us.
Thank you very much for having me.